Oracle reports earnings today after market close, and right now as I pull out SweepAlgo, our algorithm trading tool, you can see that the stock is trading at 150.69. The gamma flip point is at 152.75. That means right now Oracle is sitting below the exact line between a stable market and a volatile one. And in this video, I'll be talking about 4 things: previous earnings, the OpenAI deal, free cash flow, and gamma exposure. Welcome to Market Open. If you're new here, my name is Japhet. This is where I break down the market using gamma exposure, the same data that is used by professional traders. So there's no RSI, there's no MACD, and no vague price targets. Just real levels, real data, and exactly what to watch out for. And if that sounds like something that you've been missing out in your life, subscribe right now and watch till the end. Now let's get started with the previous earnings. Now let's take a look at the previous earnings of Oracle. Last year in Q4, this company reported $6.7 billion in. Now let's talk about Oracle earnings from the previous quarter. Oracle Cloud Services brought in about $6.7 billion, which was up by 27% year over year. License support brought in about $5 billion, up by 1%. Cloud license brought in $2 billion, up by 9%, which is very nice. Hardware brought in about $0.9 billion, up by 1%. Services brought in $1.3 billion, up by 2% year over year. Their total revenue was about $15 billion, 0.9, up by 11%. The net profit was 22%. But here is where things start to get crazy. As reported by CNBC, Oracle is building yesterday's data centers with tomorrow's debt. So OpenAI is walking away from expanding its flagship Stargate data center with Oracle because it wants the next generation NVIDIA chips at the new sites instead. Now, Oracle is the only major player funding the AI build-out, with debt carrying over $100 billion on its books. Now, I want you to understand this. They are taking $100 billion in debt while the business is already burning through $13 billion, almost more than it brings, because if you go back to their earnings here, you see that the company brought in about $15 billion and they have already burned through $13 billion in free cash flow. Go back to stock analysis and you can confirm that they are spending more than they have ever done. Look at the free cash flow here. In the first, probably the second time in a year in a row that they are in the negative territory, and this is very disturbing to me. Now let's take a closer look at Oracle's chart. I'm using Thinkorswim. If you're using any charting software like TradingView, you should be able to see the same data. If I draw a trend line from here, from the bottom, from current where we are currently to the all-time highs, you see that the stock has dropped 57.06%. That's almost $200 from its all-time high, and it's also trading below 200 SMA. And when stocks drop below 200 simple moving average, they tend to sell off. This big gap you see here is when they announced a deal with OpenAI, and the stock went crazy on those earnings. And also, this rally was fueled by acquisition of TikTok USA. Now that brings us to the most exciting part on how to analyze this stock using gamma exposure. If you don't have this tool, go to SweepAlgo.com, grab yourself an account, and then log in. You'll be able to have a very unfair advantage over retail traders because they're trading chasing candlesticks. Now let's take a closer look at the gamma flip point. This is the most important level on the entire chart right now. The gamma flip point is the line between a positive and a negative gamma for dealers. When the price is above this level, dealers are in positive gamma. They absorb volatility and the moves are stable. While the price is below this level, dealers flip to negative gamma. They amplify every move and volatility spikes. And that means we are in negative territory and we are net negative $12.6 million in negative. So dealers are short gamma. This is a high volatility environment. Moves in either direction get amplified. So if they beat earnings, stock could rally big, and if they miss, the stock could drop quickly. The next thing we'll talk about is gamma wall, and you can see here the gamma wall is at 170. This is a structural ceiling of about $8.5 million in gamma sitting at this strike. What that means is dealers have a massive call exposure at this strike of 170. Right here you see we have about $8.5 million. As price approaches 170s, dealers are forced to sell their shares to hedge their delta. The next one is Max Pain, which is once at 175. And this is a price where maximum number of contracts would expire worthless. So if you're buying calls or puts, market makers are most likely to eat your premium. It is the gravitational center. The market tends to gravitate towards that. Now, and we are currently at 150.69. That is about 14% move away from the current price. If you look here, you see that the price is about 12. Actually, it's 12.3% below 170 resistance, which is as a negative of $12.8 million. The upside tends to fail into resistance. The downside can accelerate towards support. So my biggest worry is that we have a huge put wall here at 140. If they announce earnings and they don't beat, or they issue poor guidance, I'll say something about the data centers that is viewed negative by the street, expect this stock to drop to 140, because that is the next leg where we have a huge exposure in terms of put wall. But 180 and 170 have most positive gamma exposure. If you don't have these two, please click the first link below and start seeing what market makers are doing here in the scene. Now let's talk about a few scenarios here. I have two scenarios. One is bullish and bearish. So the bearish case is Oracle beats earnings, guidance is solid, Wall Street believes the $100 billion debt is going to pay off. Stock gaps up. The key question is, does it open above the gamma flip point, which we talked about, which is at 152.75? If yes, then we flip into the positive gamma territory. Dealers go from amplifying volatility to absorbing it. The second scenario is bearish one. Oracle misses, guidance disappoints, Wall Street looks at the negative $13 billion in free cash flow and the $100 billion in debt, and decides not yet. The stock gaps down. If the price breaks below 152.75, we lose support and confirm a negative gamma. Now dealers are in full negative mode here. Every tick lower forces more selling pressure, and the move accelerates faster than you think. So make sure to subscribe if you found this video helpful, and also leave a comment below. Are you bullish or bearish on Oracle?